Hey everybody, Brando here. If you like buying car parts, eating burritos, buying stuff online, or just learning about different stocks, then I hope you'll get something out of this video, as today I want to go over a handful of stocks that are actually priced over $1,000 a share.
It's over 9,000!
So many different investment platforms are now offering fractional shares, so it's super easy for you to buy $10 worth of Google, even though their stock is trading at several $1,000s a share. That's not one that I'm going to cover in depth so much in this video, but it is another one of these stocks that are over $1,000 a share. Hopefully some of these other stocks that I'm going to talk about might have been under your radar and you didn't know about. So definitely let me know in the comments below if you are investing in any of these, or if any of these might have piqued your interest after we go over them. Just because a company's stock is trading at something like $300,000 a share does not mean that it's actually a more expensive company than a stock that is trading at, say, $50 a share. When you're truly valuing companies, market cap or market capitalization is the number that you really want to go after. So if for some reason you were a multi-billionaire and you wanted to buy a company in cash, you would need to buy all of the shares outstanding at the current market price. So if a company had 1 billion shares outstanding and the stock trades at $100, the market cap of that company will be 100 billion. To help show this, I'm going to do these companies in smallest to largest market cap. So when I get to the last one, you'll definitely see the size of how market cap matters regardless of stock price. The first stock we're going to look at is going to be for all of you alcoholics, and that is going to be the Boston Beer Company, which is ticker symbol SAM. This is a $13 billion company and they trade at a little over $1,100 a share. If you have ever heard of these small beers like Sam Adams, Angry Orchard, Twisted Tea, Dogfish Head, Coney Island, which I didn't even know they actually own that one. All of these are under the Boston Beer Company. You can look through their earnings that they put out on their website. They also have a few things talking about Truly, which is their hard seltzer brand. Twisted Tea, I've definitely had that before. Along with Angry Orchard, which I didn't know they have 50% market share. So out of every company that's making hard cider, they're doing half of that revenue, which is absolutely crazy. Now, I am also incredibly bullish, not so much on alcohol, but on the green trees space being legalized more so across the country. And I mentioned this when I revealed all of my stock positions, so that little card thing will be up there, and I'll throw a link in the video description. But what does this have to do with Boston Beer? What if I told you they are looking into cannabis beer over in Canada? It's going to be interesting to see where this one plays out. It might be a stock that I have to buy. Get in the zone now, because next up we have AutoZone. This one trades right at around $1,400 a share and they have a $31 billion market cap. They consistently have incredible earnings per share, and I don't see this company going away anytime soon, even though there are a bunch of competitors in this space like O'Reilly's Auto Parts and Advanced Auto Parts. They just reported third quarter earnings, and these are some pretty good numbers. Net sales are up 31% to $3.7 billion. Operating profit increased, net income increased almost 75%. That's how much they're really bringing to the bottom line, which is huge. And another huge thing here is share buybacks that they did personally at around $13.57 a share. I said personally, but it's really as the company doing it, probably their CFO or something. But when a company buys their own shares, they want to purchase it since they believe their own stock is undervalued. The shares are only trading around $1,400, so am I buying them when the company just bought at $13.57? Not really. But that's because this is also a company that I don't know how to invest in it. I don't know how to evaluate if it's undervalued, overvalued, how much it's going to grow. Let me know if you can explain it to me, and then maybe I'll throw some money in. But this next stock, this is one that I can understand because I've been here before many times. Like I mentioned in the beginning of the video, if you enjoy burritos, burrito bowls, then the next stock on this list, which is Chipotle, is definitely something that you should look at. Ticker symbol CMG. They have a $37 billion market cap, and this stock has performed incredibly well over the past several years. So if you have invested in this stock, a round of applause to you. Because you have made some serious good money. A lot of stocks did drop after the January pandemic fears from January to March and April. I believe March 20th was the true low. So if you grabbed this thing at a little over $600, you doubled your money. You could have doubled your money in a lot of stocks, but this one was definitely incredible. Now, I feel like crap for not investing in this one because I've been going to Chipotle and spending my money there since probably 2014 or 2015. Let me know if you actually want to see me do something where maybe I track down my first Chipotle purchase because I have my last, 6 years of transactions in Mint. So I could probably find the first time I spent money at Chipotle for $10. And I could say if I bought Chipotle $10 or one share of Chipotle on this date and traced it forward, this is how much money I would have had, which makes me cringe just thinking about that. But maybe I do it for Amazon. I trace back my first Amazon purchase or Best Buy, or just an idea. Let me know if you do want to see this. The Germans have a word for it called Schadenfreude. So basically you get pleasure from someone else's misery. So if you do want that, let me know in the comments below, and also don't forget to subscribe to the channel so you don't miss future videos. Up next on this list is a business and technology favorite that has absolutely exploded thanks to the pandemic, and that is Shopify, ticker symbol SHOP. This stock is literally on fire, and if you look at a 5-year chart of it, the growth here has been incredible. A lot of this did come after the pandemic with e-commerce and businesses having to flip to online. Incredible growth opportunity for Shop, but regardless of that, this company was still booming even before the pandemic. Now, most of the numbers from their recent earnings report are in the high double digits or even triple digits. In the earnings report, Shopify's president, Harley Finkelstein, I hope I didn't botch that, says our singular focus is on making entrepreneurship easier and making it easier for entrepreneurs to succeed. Merchant sales growth on our platform accelerated in the first quarter as merchants leveraged our modern commerce technology, which helps them compete in any retail environment and engage directly with their customers wherever they are. This is great words from a president, and if you think entrepreneurship and more people are going to start businesses in the future, they're probably turning to Shopify. For anyone who gets their financials on a stock from something like Yahoo Finance, which is where I usually go, MarketWatch or Seeking Alpha or any other site, if you look at the huge jump in earnings that Shopify has, Yahoo Finance tells you nothing other than it just looks like a massive increase in net income. They are hugely profitable now, all this crazy stuff. However, if you actually open up their quarterly earnings report, you'll see that they had a $1.3 billion unrealized gain on Affirm, which just went public in 2021. They also had adjusted net income over 10x to over $254 million compared to $22 million a year ago. They'll probably have close to $10 billion in cash by the end of 2021 if they don't have more than that. So this company is just an incredible spot to continue to grow in the future. To truly drive home the point that share price does not equal super expensive company, we're throwing in an honorable mention. So if you've ever had Dairy Queen, or if you like Geico or use Geico like I do for auto insurance, then you probably heard of Berkshire Hathaway. Their shares for their Class A shares trade at a little over $430,000 a share, which is probably the price of some people's houses, or in the case of mine, that's like 2 houses. As you can see, over the last 5 years, this stock has also done incredibly well, and do not feel bad if you don't have hundreds of thousands of dollars around to just buy one share of this stock. There is a cheaper alternative. You can buy Berkshire B class shares, which is BRKB, whereas this is BRK. A share of Berk B, I don't know why I'm calling it Berk B. I'm going to call it Berk B. Berk B is 1/1500th of a share of Berk A. The other thing is that a share of Berk A has a lot higher voting rights. And if you have one share of Berk B, that is 1/10,000th of the voting rights. So there are fancy reasons as to why people should buy Berk A versus Berk B. If I ever go into Berkshire Hathaway, which it's been on my radar, my watch list for a while, I'm probably buying Berk B. But this last stock, everyone probably knows. As you can probably imagine, the last stock on this list is going to be Amazon, which is one of those truly big companies at a $1.6 trillion market cap. Amazon's currently trading at a little over $3,200 a share, which That sucks because I remember when this thing was still under 2,000 and it's not going there anytime soon. You look at a 5-year chart of this one and the growth has been incredible. They also just reported their first quarter earnings in the end of April, and there were two specific numbers that really stood out to me, which were operating income and net income. So if you look at operating income, it increased to almost $9 billion in the first quarter of 2021, whereas in the first quarter of 2020, that was $4 billion. If you look at net income, which is how much of that actually goes to the bottom line, it was increased to $8 billion, whereas it was $2.5 billion in 2020. So before, they had $4 billion of operating income, and they were left with $2.5 billion in net. Now they're bringing in almost $9 billion in operating income, and they drove that all the way up so that their net income is almost $8 billion. Actually, it's over $8 billion. I'm not putting a lot of money in here, but I do like using public now since it's super easy to buy fractional shares. You can do dollar amount or you can do shares, and you can kind of tweet with it and all these different things. But basically, if I put $500 in public and I buy $300 of one stock, I might just put that $200 in Amazon because I just keep dollar cost averaging into this. You can also get free stock when you sign up for public. I'll throw a link in the description so you can sign up for them if you do want to try and use them out. I do like them a lot more than I've liked other brokerage accounts in the past. Their interface is really cool. I like the tweet aspect of it, and you can literally see everyone's trades, how much money they made, and everything else like that. If I had to rank these 5 stocks from I absolutely want to buy them to meh, then I would probably say Amazon, Shopify, Chipotle, Boston Beer, and then AutoZone. Thank you for watching the video. I hope you got something out of this. Like I said, let me know in the comments below if you are bullish on any of these stocks, or if you've never even heard of some of these stocks before. Definitely be sure to hit the like button to help me out with this video and show other people these stocks that are over $1,000 a share. Be sure to subscribe to the channel if you have not already. And as always, like I say in every video, until the next video, please be sure to be smart with your money.